Hey, this is Josh High with Market Prime Mortgage in Brandon, Florida, and today I'm going to talk about FHA versus conventional financing. So I get a lot of clients coming to me that ask questions about FHA, thinking that they need an FHA loan or they need a conventional loan, or I heard this about PMI, I heard this about mortgage insurance, I heard this about rates. There's all kinds of misconceptions out there when it comes to these two different loan types. I would say that these are the most popular two types of financing that are out there. Most people do fit into these categories. So I wanted to talk about the differences between the two, show you where FHA might make sense versus conventional, and where if you qualify for conventional, you might be better off going with FHA and vice versa. So let's take a look at the differences between the two. First thing you're going to notice is some differences here between FHA and conventional. Your minimum credit score on FHA is going to fall at 580. There's an asterisk there. We can actually go lower than 580. We can go all the way down to 500, but that requires a 10% down payment, a manual underwrite, and those are typically very, very hard to do. And there's something happening to your credit profile keeping you out of your 3.5% down payment. So take that with a grain of salt. 580 is pretty much the minimum that it's going to take to get you an FHA loan. Credit score for conventional, minimum of 620. Now these aren't going to be the best rates at 620. Your mortgage insurance is going to be high, and there's some products that you're not going to be able to qualify in the conventional arena. All right. Minimum down payment, FHA is always going to be 3.5% unless stated otherwise with the lower FICO. 3.5% down is your bare minimum getting into the FHA product. You can go higher if you want to, but that has no effect on what it does to your mortgage insurance. Minimum down payment on conventional loans is 3%. Actually, we can do a 1% down product, but that's pretty tight, and we could talk more about that if you qualify. 3% down is pretty common though. It will allow you to take advantage of a maximum amount of financing, 97%, and your rates are going to be pretty good at that point. Your mortgage insurance is going to be kind of high, but that's something you can pay your way out of. With a conventional loan, the more that you put down, the lower your mortgage insurance becomes. So once you get to 20% down, you don't have any mortgage insurance. So that's a big myth that people have, that you have to have 20% down in order to buy a house with a conventional loan. Speaking of mortgage insurance, on FHA, the government has set fixed rates on their mortgage insurance. So you're paying 0.85% on your loan amount every month on your FHA payment. So what that's going to do is stick with you for the entire life of your loan. So if you have a FHA loan for 15 years or 30 years, you're going to pay that same 0.85 mortgage insurance premium every month. Now, FHA also comes with an upfront mortgage insurance premium of 1.75%. That gets tacked onto your loan amount, so that's going to be a little bit higher, and you're going to feel that in your payment. Not by much, but again, it's a cost that you're going to have to associate with that. On conventional, like I mentioned before, your mortgage insurance varies. It's based on your credit, your loan to value, loan type. If you're paying borrower paid PMI, if you're doing lender paid PMI, there's a few different ways around that. Max loan amount. FHA just recently went up to $275,655. So if you're looking at that nice $400,000 home and you can only qualify for an FHA loan, you're going to have to bring the difference between what that max loan amount is and what that purchase price is. So that's the highest FHA will go. Max loan amount on conventional is going to be $424,100. Now that's your loan amount. That's not your purchase price. So if you're buying a $500, you're going to have to put down the difference between $500 and $424 to get to where you need to be. Max debt ratios, I've had approvals go all the way up to almost 57%. On the back end, that's your total, all your debt plus your housing payment divided by your income. Conventional is going to be a little bit more restrictive, and that's going to be 45%. Again, there's a star there. Sometimes we can stretch it to 50. Sometimes it caps at 43. It all depends. There's a lot of different factors that come into play here. It's not one big answer that's going to answer everything for you. The biggest takeaway on FHA versus conventional is going to be, what do you need? What do you need today? Do you need a low down payment? Do you need a low payment, as low as you can get for the month? Have you had credit problems in the past? FHA is a little bit more lenient when it comes to bankruptcy, short sales, foreclosures, charge-offs, collections, medical collections, things like that on your report. They're a lot more lenient than they are on the conventional guidelines. So I do a lot of FHA loans just because people might have some issues in the past that they can't get cleared up and get that top tier conventional loan. FHA is still a great loan. As you see, we're not too far off on payments when you're actually looking month to month. So that's really the question you have to ask yourself. What loan do you want? Do you want to put a lot of money down? Do you have good credit? That's a conventional loan candidate right there. Do you have a little bit of money? Can you get a gift from family? Is your debt ratio stretched a little bit? Are you over 50%? Do you make money that you can't qualify with? Like, do you have a second job? Do you have family helping you that you can afford the payment, but not necessarily qualify for it on paper? FHA loan, again. So there's a bunch of different ways to look at this. We get into detail with every one of our clients, and we make sure that we understand what you need, what you're looking for, and we're going to present to you what best suits your situation. So that's the easiest way to explain things. So we'll get one-on-one. You can't really explain everything in these scenarios with broad strokes. It takes us actually digging into your situation, looking at your income, looking at your credit profile, talking to you, figuring out what you want to do, and then we're able to put a plan together for you. So to get started with all this is real easy. All you have to do is call us or go to our website. It's going to be 813-448-1501 or getwithjosh.com. There's a pre-approval form there on the site. It's going to allow you to fill that out. It takes you about 10 minutes. You can upload all your docs right there. We'll review them. We'll take a look at everything and get back to you with an action plan and figure out what we need to do. So we look forward to working with you, and I hope to talk to you soon. Take care.